You got me running, got me running. Shake it, shake it, shake it, baby. Raise your hands up. Raise them out.
All right. Hi, everyone, and welcome to the Daily Currency Call with Forex Trading Asia. Thanks for joining us as well. And I hope everyone's having a fantastic day so far, or evening or afternoon, wherever you're watching in the world. It is episode 390 of the Currency Call, and it's the 6th of October and just past 11 a.m. Singapore time. So if it is your first time here, a big welcome as well, and a quick introduction. So we do the Currency Call every Monday to Friday at 11 a.m. GMT +8. And the currencies we analyze are as follows. On Mondays, we do the Aussie and Kiwi. Tuesdays, Euro. Wednesdays, we do the Pound. Thursday, Yen and Gold. And then on Friday, we do CAD and also cryptocurrency. This is the Currency Call. And here you will get market economic updates, the key support and resistance levels as well, trade ideas, and of course, much more. This Currency Call is going to be very beneficial to both the long-term investors and short-term traders. And here we will go through what could move prices, possible trade ideas. And when I mention possible trade ideas, also live trading, such as yesterday. So that's another reason to catch the call every day. You never know what is going to happen, especially yesterday with the Aussie dollar. And we'll also highlight the potential targets and risks as well of the trade ideas. Importantly, to finish, any information shared during this session is not intended to be a trade recommendation. It is solely the opinion and views of the speaker. So please remember to do your own analysis prior to entering any trades. All right, so we had the RBNZ rate decision and statement out just before at around 9 a.m. Singapore time, GMT +8. And just to go over what happened with that and trade ideas associated with what the RBNZ did do, which was to raise rates. We've got Kim Hong here, currency strategist with LCMS Traders.
All right, thank you, Scott. Happy Wednesday, everyone. Okay, RBNZ. So, as expected, all right, since you guys have attended the currency call yesterday, the Reserve Bank of New Zealand carried out a dovish hike, all right? So, they did increase interest rates by 0.25%, all right, from the previous 0.25% to 0.5%, all right? Now, classic dovish rate hike. Let me just bring you guys to the rate statement. We will take a look at the chart later so we will know what we mean by classic dovish rate hike, okay? So, over here, you can see that, they say that they increase interest rate to 0.5%. Okay, the main purpose, the main motivation behind this rate hike is actually, try to maintain low inflation, because inflation has been rising, well, not only in New Zealand, but across the world, right? So in an attempt to actually, push inflation down lower, okay, they have to increase interest rates, all right? So yesterday I actually mentioned that one of the more important point to look out for is whether further interest rate hike will still be in discussion. All right. So see over here. Okay. So this sentence over here, the committee noted that further removal of monetary policy stimulus is expected over time. Okay. So they are still expecting, interest rates to be hiked over time, okay, with future moves contingent to the medium-term outlook for inflation and employment, meaning, they're still going to, based off their outlook, the central bank's outlook on the New Zealand's inflation and employment, all right, for the medium term, before deciding if further rate hike is warranted, all right. So now, regarding inflation and employment, okay, you can see from over here, okay, thank goodness, all right. the current COVID-19 related restrictions have not materially changed the medium-term outlook for inflation and employment since the August statement. So back in August, they actually released these quarterly projections, and ever since the recently imposed restrictions across New Zealand, the market was actually worrying that the next time round when the central bank releases their quarterly projections, they may actually revise it downwards, okay? But nonetheless, fortunately, over here, they say that, these recent restrictions have not materially changed the central bank's medium-term outlook for both inflation and employment. So with that, okay, personally, I would say that further rate hikes are still on the table. Okay, are still going to be in discussion. All right. So the next meeting will be on 24th of November. Okay, and if I'm not wrong, I read somewhere that market is starting to price in a rate hike for the during the next meeting in November. Okay, so yeah, so we can actually look forward to more rate hikes coming from the New Zealand Reserve Bank of New Zealand. Okay, now back to the classic dovish rate hike. Okay, let me just show you guys the charts.
So while he brings up the chart, remember, first heard here, next rate hike in November from Kim Hong. Projections are done. Take note of that. Put it in the calendar.
Put it in the calendar. Don't worry, I'll remind everyone when the day comes. Okay. Okay, so what you're looking at right now is the M1 chart, okay, for New Zealand dollar. So the Reserve Bank of New Zealand hike interest rate, which is actually a good thing, right? So we see, so we can actually expect appreciation, a strengthening of the New Zealand dollar. All right, but okay, because this is a dovish rate hike, like what I mentioned yesterday, previously during the August meeting, okay, the RBNZ, they were actually considering a rate hike of 0.5%. Okay, meaning this time around, well, at that time, okay, they were supposed to see interest rate to be at like 0.75% already. Okay, but because Governor Hawksby, Assistant Governor Hawksby's comment of central banks around the world are actually hiking interest rates in denomination of 0.25%, that actually sent a dovish tone across the market, okay, hinting that, the central bank may actually be increasing interest rate by 0.25%. So that actually causes the dovishness, the more pessimistic view coming from the market, okay, in terms of a rate hike. So as you can see from the chart, all right, this yellow dotted line over here, this was actually the time when the announcement was made, all right, the hike rate announcement was made. So for the next 1, 2, 3, 4 minutes or so, we actually see green candles, okay, bullish candles. The New Zealand dollar actually rose by 26 pips, okay, which actually moved according to the action, right, the rate hike action. But then after that, okay, you actually see a depreciation of the currency, like within the next 5 minutes or so, the gains were just returned back to the market, all right? The gains were just returned back. And then right now we are seeing a way lower price than where it actually started, right? It was actually all in all, there was actually like some 50 pips decline from the top. So this is what we meant by a dovish rate hike, okay? When the announcement is being made, okay, the initial response is positive because it's a rate hike, right? But because of the underlying reasons of, the expectation that, the initial expectation that the central bank is supposed to hike 0.5, and now they are actually hiking only by 0.25. That sort of like causes a disappointment, right, in the market, right? And that was what led to the further, the further decline, the further depreciation of the New Zealand dollar. So if we were to look at other charts like New Zealand yen, we see similar movements, right? For the first 4 minutes, it's strengthened by some 27 pips and then it starts coming down. Subsequently, even for the New Zealand francs, okay? So why am I showing you guys only these 3 charts is because the USD the Japanese yen and the Switzerland francs, all of them are safe haven currencies. Okay, so when there's a rate hike, when the central bank is hawkish, there tend to be a strengthening of the currency against safe haven currencies. Okay, but then because of the dovish rate hike, okay, we can see that this whole dovish rate hike illustration becomes clearer. Okay, when we look at the currency against the safe haven currencies. Okay, the other safe haven currencies. So as for other currencies like Australian Kiwi or Pound Kiwi, Euro Kiwi, and things like that, it really depends on the other currency as well. Okay, so which is why I show you guys only these three currencies to better illustrate what I'm trying to say. Okay, so with that, yes, we will be hearing from the Reserve Bank of New Zealand again on 24th of November. Yes, 24th of November. Yeah, personally, I'm still going to expect that the central bank will be rising interest rates as of now because the COVID cases, yes, it's still rising, right? But as of now, they are still, it's still pretty much under control. Okay, some sort of under control in New Zealand. Okay, so hopefully things will turn out better. Okay, turn out better, and we'll see what the central bank thinks as the meeting draws near. All right. With that, I will hand it back to Scott.
So Kim Hong, there's a question. Long-term sense, New Zealand dollar to weaken due to dovish hike, or is it just a short-term decline? What do you think?
Short-term decline. Short-term decline for now, because like I said, for example, let's just put in some scenarios over here. All right. If let's say the whole COVID situation would turn out better than expected, okay, maybe say by the end of this month, maybe New Zealand has already eased all COVID restrictions, all right? And we see a strengthening in the economic indicators in New Zealand, okay? Then there is a chance, okay, that the RBNZ may actually be hiking interest rate more than 0.25%, right? If that were to happen, okay, then, it will change the whole, I wouldn't say the whole, but it would change the direction of how New Zealand dollar will be moving, right? So this dovish hike, okay, personally, I'll just keep it short term. Short term, probably until the end of this month or something, all right? Yeah, if you guys are trading cross pairs, just also, yeah, like I emphasized many times, pay attention to what's happening, what's going on the other side of the world, okay, for the other currency, okay? If you're trading pound, the whole post-Brexit tension, between Europe and UK is still ongoing, that kind of thing, trade and things like that. If you're trading against Australian dollar, note that the Australian dollar is not doing that well as of now as well. So, are you going to sell Australian dollar? Or are you going to sell the New Zealand dollar? It's a bit hard to determine right now because both are dovish. So a hint here, Aussie Kiwi is probably the pair that you want to avoid. Sorry?
So sell both.
How are you going to sell both, right? I mean, if I'm trading Aussie Kiwi, how am I going to sell Aussie against Kiwi and sell Kiwi against Aussie? It doesn't make sense. All right. So yeah, just try to avoid Aussie Kiwi for now. At least I will. Okay. Any more questions?
No. So I'll add on to what.
Yeah, $1 million question from you. Come on.
And also Noah's question is, whether it's a long-term or short-term decline. I do agree. It might probably be a little bit. I would say make it medium term, so just so that we cover all bases, make it medium term. But here, looking at the charts, just before I get Scott to go into the dollar index, the New Zealand dollar, as we spoke about it on Monday, you could have traded the news. There could have been a short-term news trade, which if you wanted to learn how to trade or get a snapshot view of how to trade the news, we did that example on Monday where we looked at on Tuesday when we looked at the RBA news release, and I gave you the insight into how to trade the news. But for the New Zealand dollar at this point, I would say I would want it to break below this red line that I had, and I did analysis before we could see that downside move towards 68.19. So at this point, if you're looking for something to enter probably a little bit early at this point, I would say wait a little bit more, let it break past this level before looking to sell for a medium-term kind of trade. So with that, Scott, you can go back and take your dollar index.
All right, thanks, Jin, and Kim Hong as well. Now, I'm just going to share the link from yesterday. This is when we had the RBA rate decision and statement, and it was just discussed as it was coming out. And for people that are watching that aren't in the Traders Club as well, we are doing the 1 month free trial as well, no obligation. And I've shared the link up here as well with Jindal Thai as the site as well. So just click that, fill in your email and name, and we'll get you into the Traders Club as well. So now also US dollar, definitely it's been somewhat stable as well. I've just got the chart up here now, thanks to Sam Trade on the 4 hour. So I've got the low and the recent high captured here in this rectangle, and it's just a way to offer a visual cue to sort of show that we're around the middle or so of the two levels. And we did have last night, and I'll bring that up now. So we've got the context there of where we are currently, and we're back over 94 as well. Although I will say, you know, last night, it was an interesting session where we did have equities in the US, especially the NASDAQ, S&P 500. It did move higher as well. So we saw the US dollar a little subdued, but it was still relatively, you know, held up quite well. And with the economic calendar here, thanks to Forex Trading Asia, the standout point here, and it was mentioned yesterday by Jin as well and myself, was the ISM non-manufacturing PMI for September, and it actually came in higher than last month, and the expectations were 60 flat. So to put this into context, anything over 50 for the ISM PMIs here is considered quite strong as well. So we've got things moving along again, and we do have for tonight, so we're back to Wednesday now, and in GMT +8 time zone, ADP non-farm employment change for September. Now, this doesn't necessarily reflect what the NFP is going to be, because we haven't really seen a very strong correlation, but it's just a point to reference to. I mean, if it is high, there's just a higher chance that the NFP is going to be high as well, but 428 is expected. And then we've got FOMC member Bostic speaking as well twice, 9 o'clock and 11 o'clock as well. And what I will do, just go back to the charts now. And a talking point would be that where we currently are, and in the lead up to the NFP on Friday night at 8:30, there's just a more and more pressing momentum that's taking place. I mean, what would be interesting to see is if the equity markets continue this after the pullback that's occurred, if they do push higher, or if they do start rolling over again. And what I did notice was in the Australian session so far, we are seeing the thing with the Australian session this week, we've got that national holiday in China until Friday, the markets reopen properly. And the iron ore markets are traded very thinly in the Singapore exchange for iron ore. So the Dalian exchange reopens on Friday. So for people that might be monitoring the Aussie dollar, it's just been a little unusual, to be honest. And we have seen it now pull back again, and it's rolled over. So if you are in some challenging market conditions, it's quite easy to get, you know, sucked in and be quite frustrated. I would just say one thing that I refer to is a few of the iron ore miners in Australia, and they're quite, you know, beaten down right now. So you just have to wait and see on this. We had a positive trade balance as well for the Aussie, but with the US dollar itself right now, I would say if you haven't already, you know, got into a position, if you are an index trader, you'd really want
pound sterling to US dollar eases below 1.3650 ahead of US/UK data.
I was going to mention about this. I'm sorry about that, everyone. So that right there, guys, was the data flash where it'll actually speak out the releases. So I did trade the New Zealand dollar announcement as well, and it will give you a countdown as well from 1 minute to 10 seconds. So if you are someone that, you know, I've got a couple of accounts. I've got an account with Forex Briefcase as more conservative, although they return, you know, very good results. But if you've got more of an aggressive account, you can really, you get the release before anyone, before it's even on the screen, you can hear it and then you can, take the trade. And obviously I'm not advising beginner traders to do that, but it's something that's available, and we've got the 1 month free trial. So you might be someone that's a little more advanced and you're like, well, I don't want to pay for a RandScore subscription. Well, this is all available here for you. But in regards to the trade idea, I would say stand by. We might see, honestly, if I was to say up or down, it would be more strength is present because the equity markets are really jittery right now. So be cautious if you're thinking reversals on the US dollar here, I would say, to be honest, guys. But those are my thoughts on the US index and also just what's happening with the news as well. So up next, we do have
Hey,
Jim,
Scott,
multi-million-dollar.
before we do that,
Yes.
no, I mean, I'm not going to do the introduction, but before we get to that, what do you think? Is the dollar index going to hold above 94, or do you think it's going to consolidate and break below?
All right,
Is that the last we've seen of 94? And we're going to see 95 coming up, or what's going to happen?
It's all going to have to be with the NFP, and it's been very tough to predict that. What I have seen is the 93.7. So if we do see a pullback, I would say that it's not going to be a big push, for example, on the Aussie dollar. So if you're thinking weaker US dollar, we're going to see there's not opportunities to long the Aussie, in my opinion. And I position myself accordingly. I've added to, personally the Forex briefcase account because it's US dollar denomination. So that would be how I would see it. And I think we mentioned this yesterday as well. There's not a lot of upside. It's just very tough to get a great run against the US dollar, going weaker, in my opinion. 51 participants. I see it. 51. Thank you everyone for sharing it as well. All right.
We've broken 50. Let's hope with us breaking 50, let's hope the dollar index can break above 94.50.
Yes, I would like to see that.
Dollar index breaking 94.50, that would be a good move. But answering your question, Noah, and also with Scott's view, I would say that with the dollar index, we're probably looking at a bit of a consolidation over the next couple of days. And then, like Scott was saying, if the NFP comes out as expected or with good numbers, then we're possibly going to see, as we have broken 50, we might see the dollar index break above 94.50, which was the last high point, 94.53. Hope that answers your question there, Noah. Sorry for cutting in, Scott.
No, that's all right, Jen. And again, so guys, as Noah's been doing, feel free to ask questions as well. I saw, Noah, you did jump into the Traders Club as well, so very good move. And so we've covered the US dollar index, guys, the RBNZ rate decision, and someone asked a question in the Traders Club as well. So hopefully he's coming into the currency call.
He has, he just jumped in.
Oh, good. All right, so guys, up next now is the pound in focus. And we do have a little bit of news as well for the pound today. So there should be some potential trading opportunities. And Jin will run us through that and anything else looking on offer with the pound pairs. Thanks, Jin.
All right, thanks for that, Scott. And, I've been interrupting you guys the whole morning. So now it's my turn to speak. Feel free to jump in and interrupt me anytime. With that said, looking at the news, before we look at the news, we're going to start talking about the dollar index. We spoke about dollar index. What am I going to talk about? All right, I was going to say something else, but I think let's just jump straight into the news. Here, looking at forextradingasia.com economic calendar, checking out the news for today, Wednesday, with the pound in focus. Before we look at the Wednesday news, we did have some pound services PMI yesterday where it was 55, expected a 54.6, came out at a 55.4. Hence, we saw a little bit of an upside move for the pound dollar. But following on from that, Wednesday today, we do again have the pound construction PMI numbers looking again like it might drop slightly from a 55.2 to a 54. But at this point, I think that it might be quite similar to the services PMI, where we might not see it at 54, we might still see it at 55, hence a little bit of a positive number. But more importantly, what's going to happen tonight is the US data. The US ADP non-farm employment change. ADP non-farm employment change is a private number giving a bit of a heads up into what non-farm could be on Friday. At this point, previously it was a 374K, expected a 428. This is being released at 8:15 GMT +8. And I think that we might see quite a positive number here. Given that we see quite a positive number here, we're possibly going to see that dollar strength being applied later tonight. Following on from that, we do have some FOMC members speaking, probably not going to move prices too much. Crude oil inventories, pay attention to the CAD, which I'll tell you about on Friday. Following on from that, on Thursday, we do have pound news, but I don't think that's going to do too much. And then some US data to follow. Again, the main show, the big item is Friday evening, where we have the non-farm payrolls number. I have been repeating this several times over the past couple of days already, where previously it was 235, expected a 473, possibly going to see a good number there. The forecast has not changed at this point, so it looks like we are set up towards a good US data to be released. Unemployment rate looking to go from a 5.2 to a 5.1. So what all of these means is that here, looking at the pound dollar on the H4 time frame, the last time I spoke about this on Monday night for all the Traders Club members, I was saying that we're likely to see the pound dollar track upwards to test or come close towards the 1.3678 resistance level. We saw it move up, but then now it's tracking back down again. I think that with a bit of a lack of big news items for the pound, so not a lot of big news for the pound, but the potentially good news coming from the US, and we see how the dollar index is looking like it's strengthening off that 94 level, and hence that question to Scott, whether we're going to see the last of 94 heading upwards. I think that at this point, a revision would be to look for selling opportunities for the pound dollar towards the downside. So wait for it. It's not going to happen straight away. Wait for it. Let it break below 1.3588 at about 1.3570. You could be looking at a 30 pip, 40 pip stop loss for a very good 150 pip take profit towards the downside. That would be last week's low, and it's actually a very possible opportunity given that it breaks that support level. So a 30 pip stop loss, 150 pip take profit level, you're looking at a very good risk to reward, 1:5 risk to reward towards the downside for the pound dollar. But this is probably going to happen only with a good non-farm payroll number. So I think we move it towards the end of the week on Friday, where we're likely to see that move paired up with the data being released. With that said, the pound dollar possibly moving towards the downside. What this could mean on the euro pound is that, as I was saying, it's going to test that level before tracking towards 8497. It did that a lot earlier than expected, but at this point now, it looks like we might see it bounce off this support level back up towards the 8538 resistance. I wouldn't suggest trading it now because you would only have a 20 pip move upwards with a 20 pip stop loss, or more than a 20 pip stop loss. Not a great risk reward for the euro pound. So what I would best suggest is expect that move upwards, wait for it to break above that 8538 and try to trade it up. Look for that move to trade it up towards the 8590. So what you're looking for would be buying opportunities above 8545 stop loss, a very tight stop loss of at the most 15 pips or 20 pips. Your take profit could be a 40 pip take profit level. You're looking at a 1:2 risk reward ratio towards the upside. So quite a couple of nice trades set up to be happened or to be coming up. But with all that, coming back to the news, one thing I want to highlight to you all is that tonight we are looking at some news. Well, in the afternoon, we're looking at some news, and tonight we do have a non-farm ADP non-farm employment change numbers to be released at 8 o'clock, 8:15. I will be running a live trading session for Traders Club members. It will be for Traders Club members to join, trade together. I will run through with you what I think about, what I look at, how I trade a news release, how I trade if it moves as expected, if it moves against what I expected, what to do when you're looking at the charts and when you only have that 1 hour to trade. So with that said, the link is there. If you're not already a club member, make sure you join. It is free to join for 1 month. And then make sure you turn up for tonight's session. Club members, you have voted that you will attend. Make sure you pay attention, look at the link and attend. It's going to be at 8 o'clock tonight, GMT +8. With that said, I'll pass it back to you, Scott.
All right, thanks for that, Jin. And again, guys, the link there for the free trial is below as well. That it was just shared there by John Wee. And we also have the trade ideas as well for the euro pound and also for the pound as well, pound US dollars. So check those links out, guys. Remember the trade ideas that have been presented, and please, just take these as views from the speaker as well. So remember that disclaimer, and hope to see everyone in the live trading call at 8 p.m. GMT +8 as well. Thank you so much for watching, and hope to see everyone again tomorrow for 50+ viewers on the